What up, everybody? What up, Labo? EFRA, Wazy, what's up, brother? Crazy Eddie, Will, Planet Mentality, Rollout. What up, everybody? Thank you, Crazy Eddie. Yeah, I mean, it's just a weekly forecast. More or less, I'm in the mindset of just recording a video, not really a live stream. What up, Alex Conley? I'm not going to be talking too much to the chat. If you guys have been here for the weekly forecast, I usually just do the weekly forecast. I don't answer questions or anything like that. Tomorrow, of course, I will be on the live stream per usual. If you don't know already, this is my last week of publicly doing this. Okay, so this upcoming Friday will be the last live stream that I'm doing, and then I'm going private. I don't particularly care what anybody else says about it. I've been out here doing this for close to 3 months now. I have a track record to prove it. I've proved to all of you on live stream that I can do this. If you want to pay for a private mentorship, you can do so. If not, there's no hard feelings. I put out enough information for all of you to learn for free if you would like, just so you all are aware and you know what's going on for the rest of kind of the week here. So if you're just tuning in, you're just new, I mean, I would advise going back through the older live streams and the older videos and everything with... I'm sorry, I lost my train of thought. Alex, I'm not going to answer that. But let's just get into the live stream here. Let me know if you can see the screen when I transfer it over. Just type of 1, anybody if you can, just so we're all on the same page here. Got it? Okay. Assuming you can see. Cool. I don't know how far the latency is. Nelson Discord. That's the last question I'm going to answer, okay? I just want to get into the weekly forecast so those who watch it are not having to scroll through everything. So let's dive into NQ today and dive into everything. I would rather start off this week with, actually, let me pull it up, is the economic calendar. So this is the most important because of a few factors, obviously. This is your roadmap for the week. You get to look at it, see what blocks are in the way, what openings are available for you. And this is going to set up the days that you can plan out. All right, what days do I want to trade? What days do I want to pick my shots? When you look at price, you try to match it with the economic calendar. It's not always correct, but you at least try to see, what price looks like currently and where it's at and how it would line up with the economic news drivers that are coming out. So this is my time zone, so please don't get it confused. I'm just looking at what red folders are here this week. So this week we have CPI. What's the protocol for CPI? Well, typically Monday, especially with no economic news driver events with CPI ahead of us, what are we expecting? I'm expecting a very low range, small range type of day. And this is where a lot of people are going to be brainwashed into believing you can trade every single day, which, congratulations if you can. Hats off to you. It's not my style. It's not what I teach, and it's not what I'm going to sit here and tell you to do. I'm going to tell you for a fact that tomorrow I'm not going to be trading. Will I be live streaming? Yes, I will be. If I was by myself, if this was me as an individual, without live streaming, without all this social media stuff, I would be sleeping in tomorrow. I'd be looking at it as a 3-day weekend. And even last week, I didn't trade Thursday. I didn't trade Friday. Saturday, Sunday, we're at 4 days. Man, I'm itching. I got to do something. I got to take a trade, right? Right? Like, come on. That's why I signed up for this. I got to make money. No, you're in the addictive crackhead mindset. We're in this as a professional analyst and as a business. I'm looking at this as, okay, if I have to wait 5 days to take a trade, who really cares? You have to adopt the mindset of, if you have to wait the entire week to take a trade, I mean, who really cares? This is the number one thing I preach, is patience and just chilling out. This whole social media thing has programmed so many of you to be so addictive and so hyper manipulated into trading every day. The only reason I'm emphasizing this is because if somebody's listening to this, and they are, I want you to understand that you don't have to. I've showcased that last week. We took one trade for 50 plus handles, and that's all you could need. I mean, why would you want to trade and work harder than you really have to? That's the mindset I'm trying to give to all of you. So Looking at Tuesday, I may trade after CPI. Typically, I'm going to wait for the open. I'm going to wait for silver bullet. Regardless of what's happening that day, my rules don't change. They don't just mold because something's in the way. No. If CPI is coming out 1 hour before the open, then I'm going to wait for the open, and I'm going to wait for the silver bullet. That's the way my rules are set. I'm not going to deviate. I'm not going to change them. The line in the sand is drawn. We stay on one side. We say, this is my rules. I'm going to stick with it. Wednesday, we have a 30-year bond auction, which is at 12 my time, 12 p.m. That'll be interesting. Thursday, we have core PPI. We have 5 red news event driver folders coming out on Thursday. So be aware of that. This week may be hectic. Just a little advice, especially when you roll off of NFP, which was Friday. You have to be careful of that. You have to be understanding that. Well, especially tomorrow, with no economic news driver events rolling off of Friday, things are probably not in your favor. Just from experience, 6 years of experience doing this, it's usually what it's telling me to do. You got to lean on your experience, regardless of how much you have. If you have to lean on mine, you have to lean on somebody else's ICTs. Lean on it. We know what we're doing. I proved it to you. He's proved it to us. So I lean on that. You have to trust it as if it's your own. Friday, we have, looks about 2 red folders, a couple orange. I'm not too concerned with those, but we have 1 hour before the open and 30 minutes basically right at the silver bullet. So I'm going to be looking at probably Friday. I'd rather be wrapped up by that. I'm transparent as possible. I know this week is my last week doing this publicly. I'm going to be very careful, tedious. If I could pick a shot or 2, that's probably all I'm going to do. I'm not going to be going balls to the wall trying to trade a bunch before I'm ending this. I'd rather just give value, answer as many questions for those who won't be with us, and send it on its way, really. So that's the economic news driver event calendar. And again, you want to match that with your schedule for the week and be like, all right, what days do I want to trade? What days looks probable? And then you look at price and you kind of look at the weekly candlestick. By the time you roll into, say, Tuesday, Thursday, you look at it, you say, all right, what is the high of the week set, low of the week set? Where do I think price can expand, to buy side or sell side, etc. So as far as NQ, I'm looking particularly at this monthly candle. I know some people will be looking at this and there's not a lot of information, but I do this practice that I tell a lot of people is to visualize, right? Again, this comes with experience. So you want to visualize what a candlestick may or may not look like. If you have enough experience, you're probably going to be pretty good at this skill set. So especially if you have enough information to predict it. In 17 days, let's just play a hypothetical scenario, right? Let's say this was the top, right? Let's say this is the top in the index future markets. What would I want to see out of the monthly candle? What would I want to particularly visualize it like? Well, it would be ideal for this thing to completely overlap this one. Why? Because what would that turn into? That would turn into a bearish order block. And from there, the following months can utilize that as some type of PD array to reject price and move off lower. I'm not calling a top in this market, but I'm playing a hypothetical scenario in my mind and what it would look like, right? Because we've taken out buy-side liquidity. I'm playing the hand that ICT stated this over the weekend, where most people, especially if you look at all the markets across the board, you look at crypto, index futures, a couple other things, we're at all-time highs in a lot of things. And if you look at the state of the economy, you look at the state around you, especially in the U.S., are things really good? Like, does this make any sense to anybody? Why? This is going to be a little off topic, but I just want you all to stop and think for a second. Like, okay, food is at all-time high. Housing, in terms of pricing, is at all-time high. Look at cars, they're at all-time high. You look at things across the board, everything's at an all-time high. You have markets that are contradicting that, right? So what I'm trying to believe is, well, what are we going to see for the rest of the year? It's kind of what ICT was hinting at as well. This could be a top. You don't want to call a top. You don't want to be the smart guy. You want to be the correct person, which is waiting for enough information. But in terms of visualizing and looking at it for the rest of the year, it would be interesting to see this thing completely sell off. You have to think about human emotions and the way these markets work, right? Go back to core content 1. You have smart money, you have dumb money. Smart money, in my mind, it would be smart to be unloading their positions at the very top, where a lot of people, they see this bull run and they feel fearful of missing another extension higher, right? They're like, oh my God, it's at the top, I got to buy it. Look at crypto right now. Everybody talks about crypto when crypto's at all-time highs. Nobody talks about crypto when crypto's at its very lows. It's the same thing here, even with index futures. If it's at an all-time high, everybody's looking at this trying to buy it because they believe it's going to go off into infinity. But the market has cycles. It does it every single time, over and over. Go back in history. We're at all-time highs. Price has some type of sell-off, some type of correction. It always does. This is something you have to keep in mind when you're trading at all-time highs is there more than likely is going to be a correction at one point or the other. You have to understand that. To have some type of belief is being arrogant, is being blind to the information that is ahead of you. That's already happened before. Look at 2008. Look at the crash there. Look at even way back. You go into the 1980s, 1990s. Look at that type of crash. So all I'm trying to give to all of you is just be aware of the information. I'm not calling a top. I'm not saying we should be selling, but it's just something to keep in mind. When you're looking at a monthly time frame, it's really, people ask about narrative and bias. This is what I'm doing. When we talk about the economy and when ICT goes on these tinfoil conspiracy things, it's not to scare anybody. We're trading the markets. You understand that these things are correlated to the economy. It's correlated to everything going on around you. When you enter into these markets and you want to be an analyst, you have to look at the information. You can't be arrogant and not look at the information because it correlates to it, right? So that's all I'm trying to emphasize here. As far as technicals, I know some people are like, man, get it over with, but it's very important. If you want to be a very good analyst, you want to be somebody who's is successful, pay attention to the information. So moving into the weekly time frame, looking at last week's closure, to me this is an indecisive closure. Why is that? Because we didn't necessarily close beneath this up close candle. If price closed a bodily closure underneath that, that would become a bearish order block. And to me, we could potentially then sign price lower. But it's kind of indecisive, right? We didn't close beneath it. We didn't close above it. I'll show on the daily time frame. There's a couple other things that I can't make a swift decision. Again, I come in at every weekly forecast or even the night before pretty neutral. I have some ideas. I have some levels that I'll look at. But for the most part, price changes a lot overnight and within a very small interval of time. So as far as what we have, we have this inefficiency beneath price. We have last week's high here, and we have last week's low. So this is a little tip or a little study for all of you, is if you're looking at the weekly time frame and you're looking at the weekly candlestick and you're starting out the week, in an easy environment where you have a bias for the week, let's say for an example this week here, right? You would like to take out the previous week low to then attack the previous week high, right? You think about power 3, you just look at accumulation, manipulation, distribution, excuse me. You're going to look at it as, okay, you would want ideally for the open to attack the previous week low. You can trade into, doesn't have to, trade into a higher time frame inefficiency, PD array, and then reverse and attack the previous week high, right? Both of those are pools of liquidity. Those are both targets that you can use. That's an ideal situation. You can also use it in another various ways where, you know, if you're starting out the week, you can just look at, okay, which side is probably the most favorable for price to trade into. And you have to look at it because by the time we get to tomorrow, the price could be popping up higher and it's on lower time frames, it's supporting higher prices. So what you want to look at is, okay, which one is it going to trade to first, right? You only have two levels. You either have sell side or you have buy side. Which one is it going to go for? And you align your bias and time on lower time frames and you see which one it's going to want to go for. So let's say, for an example, tomorrow we start trading lower and we're near the sell side liquidity pool, previous week low. And there's a setup, there's a model that would indicate to you to get into the market. You can utilize that to attack the previous week low. That is a model in and of itself, right? And what's the other way I talked about was in here. You could attack previous week low, see that ran out, then price, snap higher to attack previous week high. So there's various ways that you can utilize previous week highs and lows. Same way for previous days highs and lows. Pay attention to these, especially when you're looking at the open of the week. Does that make sense to everybody? Let's look at the daily time frame, refine some levels. So we have the daily inefficiency down here, and I'm going to just start kind of annotating some few things. So give me a second. Sheesh. Yeah. Gems. So look at Friday in NFP, the reaction off of the all-time high here, taking out that buy-side liquidity pool, and we dropped off lower, right? That reaction to me it indicates something. Not always. It's not something you can always predict, but if price was to maintain higher, in my opinion, it should have closed above last week's high. It should not have had this bearish closure. Closures can tell you information that's telling you something. So to me, we've built up relative equal lows, and we've stabbed into this reclaimed inefficiency a few times. So pay attention to the amount of times you utilize a inefficiency or PD array. Typically 2 to 3 times is all you really want to see out of it. You can utilize it a little bit more in this instance, but for the most part, I'm going to look at this as 1, 2, really that's the third one in here. I know there's multiple points, but I'm looking at where we moved away from it. So once, really twice. I mean, 3 times to me, especially when you have relative equal lows in here, it'd make me weary to want to continue to look for that higher price, especially off of the reaction and the close of last week. Gun to my head, I would look at the relative equal lows, which is what? The previous week low. So coming into tomorrow, coming into CPI, I'd be looking at the previous week low, the sell side here. Even if I can't find a trade or if it's not within my rules, it's fine. At least I'm analyzing price, I'm looking at it, seeing where it's going. If, let's say, again, this is all hypothetical and this is the way I play it out on a weekly forecast, is if we close underneath this inefficiency in here, that's telling me that price is no longer probably willing to look or seek for higher prices. So what would be the next draw on liquidity? Well, I'd be looking at this low in here, and you could probably split the wick in half. So wicks will act as gaps. You could split that wick in half, and you could just look for the equilibrium here, or the CE. So that's just a hypothetical scenario, and if it does play out, at least I know in my mind I'm not caught off guard, and I know where price should seek. Even this volume imbalance here, you can extend that out to your right and utilize that as well. So if price was to expand lower and that scenario played out, then I'd be looking at the CE of that wick here, discount wick, I'd look at the volume imbalance, and I'd also look at the daily time frame reclaimed inefficiency here. And by then I'm not going to keep going, but you get the point, right? You look at sell side there, sell side here. So I just have to work with the information that's with me, right? If price just sends price higher tomorrow and it's no longer willing to displace lower, okay, I abandon that idea and I just go with price. I talk about being fluid and not being so stubborn on a certain idea. It's very, very key as an analyst to do so. And I talk about being a detective, looking at both sides of the case, looking at the evidence for one or the other, seeing which one has more evidence. And if you see the trade idea and your model and everything aligns, just take the trade. That's it. It doesn't have to be more complicated. When we look at the 4-hour time frame in here, my eye immediately, when I look at a naked chart, where does your eye go? Well, my eye goes immediately to liquidity. So I'm looking at the relative equal lows in here that were built up from last week. So I got many questions on this. Why did price leave it? I've gone over it many times. But an instance is where they're going to engineer sell side or buy side. So sometimes you'll see classic support or resistance work. Now, why does that happen? Why does it leave relative equal lows or relative equal highs? For the majority of the time, there's other things going on that you're not looking at, such as S&T, such as dollar index, such as the time of the week. There's certain factors, right? Higher time frame inefficiencies, if it's just reclaiming it and it doesn't want to attack the sell side, it could leave that. Mainly it would be S&T, dollar index, other intermarket relationships, correlations. We talked about that last week, and I was not looking for sell side in here. I was looking for longs. So, but what I'm looking at now is it would probably want to gravitate towards this. What has changed? Why would it not engineer that again, right? Well, we've taken out buy side here, and there's S&T at the highs here with why I'm not participating with ES nor NQ. I would like to see what dollar index wants to do this week. If dollar index continuously propels lower, it would make me weary of trying to push this thing lower. So you have to keep that in mind. We talked about that last week with dollar index. For those who don't pay attention to it or don't analyze it or use it, I suggest doing so. So let's just play the scenario is if it went underneath the relative equal lows, where would it want to gravitate towards? Well, you start marking out all of your discount areas, PD arrays, inefficiencies, whatever it is, liquidity, and you start marking it out. So I see these two inefficiencies here. If we trade underneath the sell side, I would probably like to see price trade into these. if I'm looking for lower prices, this vice versa for higher prices, I'm not looking at the opposing PD raise as a reversal. I'm looking at it just as a place for price to draw into, and it may use it as a short-term retracement into a short-term premium / discount. So in this instance, I'm not looking when we get into these areas for longs. I'd just be looking for a reaction off of it to then send price lower again. So if you ever see me marking out opposing PD raise, I'm not utilizing it as an area to obviously short or long off of. I'm looking at it as an area for price to potentially have a short-term premium or discount retracement. That's it. So as far as the 4-hour time frame and the bearish inefficiencies and what I'm looking at, sorry, I just got a text. There's a small inefficiency in here. There's really not too much to work with, in my opinion. But that's the only inefficiency I see currently. Would I be trading this? Would I be looking to short off this? No. Again, I'm not one of those that trade higher time frame inefficiencies. I'm not a swing trader. But what I do, especially as my style, is you could wait for a reaction off of this and see on lower time frames if it's proving to you with enough evidence that it wants to move lower, and then you can just refine your entry and go short. That's, to me, it's the best style. Relative equal lows in here. You can see the beautiful reaction last week. After we took out buy side, we immediately dropped off lower. Inefficiency in here. I'm just marking out just inefficiencies. That's all it really is. Doesn't mean I'm looking at that as a shorting opportunity. But higher premium inefficiency there. To be honest with you, if this thing was really to sell off, I would prefer this to stay open. There's a difference between looking for a retracement versus a difference looking for it to stay open. The reason I'd be looking for it to stay open is the displacement. Anytime I'm looking at breakaway gaps and I'm anticipating them to stay open, what I've learned through experience is typically if it has an energetic displacement, I would rather react off of the nearest inefficiency, and it's the proximity to a draw on liquidity. If you're near in terms of distance to a draw on liquidity, such as this one down here, I wouldn't be looking at a full-on retracement higher into this premium for value gap. I hear a lot of people talk about, well, you need premium or discount to be met. No, you don't. You don't always need that. That's why breakaway gaps exist, and that's why ICT has taught it. At least in my opinion, that's what I've analyzed is, well, it's going to want to leave that open. It's in a hurry to get somewhere. So it would want to leave that open, and it would react off of any near inefficiency like that one, and it would want to trade down into the sell side. So again, there's a little gem if you're paying attention. You know, CJ, what's a breakaway gap? How do I anticipate it? Well, I just gave you it. So this can act as an inversion. I'm not saying you should be seeing it sell off and you should sell off. Just analyze it, tape read it. Everything else, I'm not really going to go over on lower time frames. All this is kind of up to the morning session and what I'm looking at. You know, what can I utilize in the morning? But that's it for the higher time frames, draws on liquidity, inefficiencies, etc. So that's what I'm looking at. Kyle Fisher. I appreciate it. Hopefully, I hope were you Fly Fisher? If you're not, it's a different name then. But I appreciate it. Thank you. Let's look at the S&P correlation. So what I was trying to tell you all earlier. Let's look at probably daily be easiest for everybody. That's funny. We got two fishes in here. Fisher. We have ES making the higher high. We have NQ making the higher high last week. And we have, what do we have here? Even you could see it last week, it was not willing to even print it. But we have a lower high in here. Swing, so right? There's a failure swing on YM. So YM, for the most part, when you want to utilize it for SFT or intermarket relationships. Intraday, I'm looking, oh, I'm sorry. Give me 1 second. I knew I was doing something wrong. That was NQ. Same thing though. This is a higher high as well. So same thing. That's ES. I had NQ on. But this is an SMT divergence. For the most part, if I'm looking at YM as a correlation or a indicator, I'm looking at it as a higher time frame. I don't really utilize it in intraday so much. I'm really just looking at the relationship between ES and NQ. because for the most part, YM is really decoupled most of the time. So I want to pay attention to these intraday. If I'm looking at a higher time frame macro perspective, looking at a switch or a reversal, I'll look at the higher time frame S&T and utilize it. So in here, it's a decent indication. And if YM, let's say, is leading the whole pack, right? It's wanting to move off lower. This thing would be the weakest because it's failing to make that higher high. If this thing starts to drop off lower, it's leading it. So these two would be lagging behind it, and these two would want to move in sync with it. But we'll just have to see with time. Again, SMT is something that you utilize as a confluence. It's an indication, right? SMT always happens first. Before a move unfolds, SMT always prints itself first. It's tipping its hat to you that the market is decoupled or it's, it's change. So you just have to look at that and see basically what price is doing, and you match it with lower time frames, confirmation time, etc., etc. Fly Fisher, do you prefer working off the quarterly contracts or the combined contract? Is there different times one is preferable over the other for ICT concepts are called? Yeah, I mean, I use the continuous contract. Everybody has their own opinion on it. It's a huge discussion. I know ICT says to use the June or whatever the contract is for that month, which I don't disagree with. The only reason I've been utilizing the continuous contract is because when I am teaching or if I'm marking up charts, I want to be able to look back at old data. I want to be able to utilize that. And if you go over to the June, March, I can't see that. It's not there on the chart. Obviously, when you place a trade and you execute a position, it has to be on the March contract. So far, I've never had an issue with the continuous contract. As far as be adjust and set, I have my be adjust on and set off. So that's a huge discussion in and of itself. That's something ICT has said. He's done both. He does both. So there's no clear answer on it. That's the way I set my charts. I've never had an issue with it. So it's kind of up to the user, I guess. I swear they put that in just to confuse us all. So let's take a look at dollar index and see what this puppy's doing. So why do we look at dollar index? Dollar index is a inverse correlation to index futures. So it's going to either help our analysis or it may do nothing for us. You just have to utilize it with enough information. What up, Tom? So looking at the monthly time frame, we have this inefficiency here and the higher premium SIBI there. So we've been in a range for almost a year, and it hasn't been much help for index futures. I know a lot of you who don't analyze this or haven't, which is fine, but I talk about it. You may be wondering why I talk about it, because it is a useful indicator and useful confluence when we look at index futures and when we do trade index futures, because it keeps you out of a lot of stupid trades and it helps you with your analysis. CJ, what makes a high probability fair value gap? How do I know which one's going to work, man? Well, there's a lot of things that obviously equate, put into that equation, but one of them is dollar index. It helps me figure out what should be the bias for the day. What should I sit still and do? If dollar index is doing nothing, it's consolidating, then I disregard it. I just kind of put it to the side, and if it's not doing anything, then it's not going to impact my analysis. But last week, we saw dollar index dropping off lower. So it's difficult for me when I see dollar index moving off lower for me to want to short NQ. This is why on Wednesday when I took my long, I sat still and I said, you know what, guys, I'm not shorting today. A lot of people were calling for it. I said, no, I'm not going to do that. I'm going to wait to see if we can get higher prices. And guess what? We got it. So if you're looking for that example, go back to Wednesday's session and you'll see that. If you're looking at the monthly time frame inefficiencies here, we have this inefficiency here where we closed off last month and then we opened up this month. Preferably, I mean, again, this kind of sometimes it's going to contradict your analysis with NQ. And some people, it's an overload of stimulus for some people. It's too much, right? Like, I can't do it, man. I can't look at all this information. It confuses me. Yeah, I understand that. It can. But to completely disregard it and say, you know what, I can't utilize this, that's hurting my analysis. Every single concept we've ever learned, at first it's a lot to learn, right? It feels like you're overloaded with stuff. You'd rather it'd be better if I just simplified it all. And I just looked at the NQ. I don't need S&T. I don't need dollar index. I don't need yields or bonds. I don't need all that. I would suggest working through the discomfort that you have, and even if it impacts your trading negatively for a little bit of time, then so what? It's called a learning growth, a learning process. You have to go through it. I understand that. You need to know when to use it and when not to use it. But I would suggest utilizing it, learning it, because it really does help you. ICT's taught it for a particular reason. He doesn't just teach stuff for no reason. So that's all I can really see on the monthly time frame. Do you have a... No, I do not. I teach daily. I'm going to put this lightly. I teach daily bias every single day. I just taught it today. I'm teaching you how to do it. I just don't label it. I'm not saying it, but I'm teaching you how to look at daily bias, how to analyze it, where to look for. Pay attention to what I'm doing, because that's teaching you daily bias. That's teaching you narrative. That's teaching you exactly what you should be looking for. Every single day when I sit down on live streams, I teach you how to do it. We have a weekly bearish order block here, plus the inefficiency there on the weekly time frame. We had a nice reaction last week, and from here, the issue I have, right, when I line up my bias for index futures, that right now I could see lower prices. I don't have to. But if this thing starts to tear off lower, then I kind of have to readjust on NQ, and the other ones will be like, all right, well, maybe that is not really ready to move lower yet. So I have to just see with current information and work with what price is giving me. You have to adjust it. It's easy when all these are in sync and nothing's kind of contradicting each other. So you're going to extend out this SIBI, which is an inversion. And I'm going to mark out all the other levels in here. So we have sell side there, sell side here. We have a small inefficiency there, but again, if price was to drop down into that area, I wouldn't be looking at that as a long opportunity. And when I'm looking at this, I go, okay, if I was to be in a long position or a long bias, what would price be reacting off of to move higher? There really isn't much. There isn't enough information or confluence compared to the bearish side. The bearish has more information, has more confluence to it. Right, we've moved up into a premium. You have the monthly SIBI, you have the weekly SIBI bearish order block. You've moved up into a premium from that dealing range high down to the low. You've moved up into optimal trade entry. Let's look at the bias side, or bullish bias. Only thing I can really look at is from this dealing range low to high here is you're dropping down into a discount. There's really no bullish PD raise or inefficiencies. The only thing I can see is a down close candle here, which it's really not that clean. So to me, I would lean on the idea, gun to my head, looking for lower prices in dollar index. Daily time frame, when I look at it, now I'm going to take this all away. It's not cluttered. You're going to mark out, refine that same weekly inefficiency there. You're going to refine it on the weekly. What did price do here? We took out buy side liquidity. What is this pattern there? That is a bearish breaker pattern. So those down two closed candles, these ones here, are your bearish breaker. So you're going to extend that out to your right. That's your bearish breaker. What did price do? Moved up into the mean threshold of it, sold off. What did we attack last week and what did we analyze? The relative equal lows were the draw on liquidity. When I look at the bearish side and the bearish bias, I see more relative equal lows resting in here with a inefficiency beneath it that is partially open. So if price was to move off lower and just looking for close in proximity draw liquidity, those two would be what I'd be looking at. If I was to look at a bullish bias, this is what we talk about all the time, or at least me, is if I was to look at a bullish side, a bullish case, if I was sitting down in a courtroom and I said, all right, let's lay out the evidence for bullish bias, let's lay out the evidence for bearish. It's overwhelming to me that it would want to seek lower prices. Again, I could be wrong and things could change and I have to just adjust. It doesn't mean I'm a bad analyst and I suck. If you don't execute on the idea, it doesn't mean anything. Being right or wrong is really not an emphasis. But I'm just laying out the evidence. If I had to look at a bullish bias, I don't see anything that would be clear enough for me to want to go long in this. The only thing I see is a volume balance here, and that's it. I mean, there's nothing else. We've moved off of a premium bearish inefficiency, bearish breaker here. We've dropped off lower, attacking sell side. There's more sell side in here. You have the support of the monthly SIBI, weekly bearish PD raise I talked about, daily in here. So again, when you look at a court case and I'm just looking at evidence, well, it's overwhelming to me that it would want to drop lower, at least for now, right? Does that make sense? When I talk about this all the time, if you're newer here, you know, obviously it may be a new concept to you, but I talk about this constantly because to be so stubborn and arrogant to one side is stupid. I've done that, where you marry a bias and you have full-on belief that it's this way or it's nothing. Well, you're going to get caught off guard because you're a human. Things change all the time, and you're a human, so you're going to make mistakes and incorrect analysis. So it's not being 50-50 and wishy-washy. It's just looking at both sides. And once you see enough overwhelming evidence and you see your model print within time, you execute on the idea and you let the probabilities play out. So only other thing I'm going to do is look at the 4-hour time frame again, just to refine everything. Is the relative equal lows resting down here. So those catch my eye immediately. If I was to look at the bullish case, bullish side, what is it reacting off of? There's no bullish order block in here. There's no bullish fair value gap. Oh, a volume balance. To me, that's not something price is reaching down into react off of. That's not, it's just an area where price is open, a liquidity void. This is actually a liquidity void, not a volume balance. It's reaching down into that to fill it. And more or less to me, it's just going to keep trading lower. That's not something price is reacting off of to move higher, right? So to me, when I look at the 4-hour and I refine it, those relative equal lows and this inefficiency down here is what price would want to reach for. So if I was looking at dollar index, that's what I'd want price to reach into. So what does that kind of mean for index futures as far as what I was looking at? Well, I'm not saying we can't attack sell side in here, but I have to be weary of that idea. Unless things start to change and dollar index starts to move off higher and I was incorrect, oh no, then I would just have to adjust. That's all it really is, right? Sometimes they can move in sync. They can do that. It's not, again, that's where people get confused and they just want to lay that whole idea of using dollar index aside. But sometimes they move in sync with each other. Being able to predict that and be okay with it, sometimes it happens. So that comes through utilizing dollar index and having experience utilizing it. Only other thing I really want to touch on is bonds and yields, which it hasn't been a lot of useful information to me, but bonds are moving off higher. Bonds move in sync with index futures, and they move oppositely to dollar index. So difference between volume balance and liquidity void, it's in core content. I'm going to make you do the hard work, my friend. So bonds are moving off higher when I look at just a macro perspective. That's really all I do on bonds and yields is I don't do intraday. I'm just looking at daily, weekly, monthly. So far, we've been moving off higher. If you go to the 5-year note, kind of same thing in here. And again, this is the same thing as dollar index. If I can't get a really good read on this, it's not very good, useful information for me. I kind of just put it to the side, and I'll just put my main focus on NQ and what that is providing to me. So that's a skilled analyst, is being able to know when to utilize information versus not. Same thing here with yields. Yields move oppositely to index futures and bonds, and they move in sync with dollar index. So if dollar index is moving lower, you want to see yields moving lower. Bonds, you want to see do the opposite of dollar, and you want to see them moving in sync with index futures, which are the opposite to dollar. So far, these have all relatively have moved off lower the last few weeks here. So that's in sync with what dollar index is doing. So just a little read in there. It's nothing too much to read into currently. Last thing I like to do is look at Euro USD. So Euro, if you don't trade foreign exchange, I did for a large part of my trading journey. Is I traded it for about 4 years. I mean, I dabbled in it last year, but the weekly time frame last week we popped off higher. We closed higher after taking out sell side here. So if you can't get a good read on dollar index, go over to Euro and see if you can get a better read on it or a little bit more information. Monthly time frame, small inefficiency in here. We moved off higher. Daily, after we took out sell side, I mean, again, I don't love forex right now. It's very, the delivery of it and price is sloppy. It's really bad. I don't like it particularly. No offense if you trade it, it's fine, but I'm not fond of it. We moved off above this old reclaimed CIVI. So what does that become? That becomes an inversion. If this thing was to gravitate higher, it would need to utilize this, especially the CE of it, as support to then move higher to attack what? Well, there's buy side resting here. What is on dollar index? There's sell side. So you're utilizing this as, back and forth, ping pong. All right, what is dollar index doing? What's Euro doing? Do they both agree? Cool. So to me, it would want to utilize this inversion. Notice how dollar index does not have the inversion Euro does. They move and stick with each other, but yet they have different feeds in them. So there's a reason why you kind of play with both of them, because sometimes they have different PD arrays at different spots. One doesn't, one does. So Euro, I'd want to see the inversion hold. and for us to propel into the buy side here and close in the remaining portion of the SIBI premium here. If it gets above that, turn it into an inversion to attack what? Buy side there. So pay attention to euro if you're utilizing dollar index as a indicator or analyzing it, whatever you're doing. That's very useful. Pound, wow. I actually didn't look at pound this last week. So very cool to see at least pound getting some displacement, some expansion. Attacked all the buy side here. And if you can see, sometimes you take out internal, which is this internal sell side there, and you leave external, which is resting here. So this will probably be attacked at one point or another in life, but obviously I don't think right now. So attacked internal sell side, rallied higher to take out. Look at all the buy side in there. I mean, it was stuck in a range. I mean, I'm happy. I'm really happy for all the guys that I know that trade forex. I mean, it must have sucked to be inside of this. It's, if you want a good example of what not to trade in, what's a low probability environment, CJ? Well, take a look at this. Is that something on a daily chart you're like, wow, I want to trade in that? No. So understand the difference, because index futures, they may go into some type of consolidation like that. So you just have to know the profiles of the market, and that's why being an experienced analyst and looking at different asset classes, seeing how they move is very good. So I think that's going to be it for today. I think I've gone over a lot of things. I dropped a lot of gems, per usual. Yeah. Again, this is my last week publicly doing this. I will be closing off all public things, daily logs, live streaming. I mean, I'll still post here and there and update on the private group and what we're doing. But as far as public teaching and stuff like that, I'm going to be done. I'm moving into a private setting. Friday is going to be the last live stream publicly that I will be doing. If you wish to join the private group, Friday I will release all the details. Do not talk to anybody, or if somebody sends you something where they're not verified with my profile, because I'm sure it's going to happen. Somebody's going to try to scam you. Do not buy into any of that. If it does not come directly from this YouTube channel, it does not come directly from my Twitter, do not buy anything from anybody. I'm telling you that right now. Do not get yourself scammed, because there's low life losers out there who are going to do it. I'm just giving you all a heads up, because I know it's going to happen. Will all your old videos still be up on YouTube? Yeah. I mean, I don't see a point in taking it down. So that's going to be it for today. I hope you guys enjoyed. I will be live streaming tomorrow, 15 minutes before the open. Until then, peace.